Let's talk about these last few days and some of the messages or takeaways, in your opinion, David.
Fairly chaotic. Actually, I'm a little surprised this morning. I really thought when I woke up this morning, I'd look at futures and they'd be down. And lo and behold, there were some comments from officials out of Japan, kind of calming the waters, so to speak, kind of walking back some of their comments earlier about, hiking rates. So very, very fluid. Very, very fluid. A lot of moving parts here. The SMCI numbers, super micro, that was a concern for the AI trade. And at least from what I saw pre the market open, it was affecting some stocks, but certainly not all.
Okay. And so how have you been, as a strategist, navigating throughout all of this? Have you been buying or selling or just navigating through and staying put for now?
Well, I'm doing both. When you run the kind of portfolio I do, most of the time I'm fully invested. So if I want to buy something, I've got to sell something. And I think what I try to do, John, is look at the dislocations in the market and look for companies that have sold off, who had great earnings reports, but sold off because the market was being dragged down. So there are a few of those out there. I think people were very concerned with Buffett's sale of Apple. And I really think of that as I think his sale of Apple, it says a lot more about his view of the economy than it does about the stock or even in technology in general. He also sold Bank of America as well. That probably says a lot more about the economy. So there are definitely things to do, and obviously people are doing it.
Yeah. And I guess if you're trying to determine the pros and cons of, let's say, well, let's use this Apple example, right? I mean, with tech, I hear every day I'll hear people say, I'm not going to bet against tech. It's been a big winner. I'd be adding to some of my big positions right now. And then I hear other people that say, well, the bull market could continue, but it's going to be spreading to other parts of the market. And I think tech is going to be the easy target for investors for the foreseeable future. So where do you land on that?
I'm on the side that the large caps are going to be the place you want to be if, in fact, the Fed is going to cut. And I think that's almost a given at this point. There's an 88% probability they're going to cut 50 basis points in September. Historically, that means a recession's coming. In the last half century, every time the Fed is cut, except one, every time there's been a recession that followed, in large part because the Fed is too late, and they're too late this time. It's historic, and this is what they do. They move very incrementally, and there won't be an emergency rate cut because simply that's not their style. It would be a tacit admission that they've gone too far. They'll be incremental like they always have, and it'll be too late.
So at the end of the day, if, with all that said, you had to put a few investment ideas forward today for people to keep tabs on, anything come to mind?
Yeah, a few things. Disney reported today, and so everybody's excited because they had a profit in streaming. You have a couple of choices in media stocks. You can buy companies trying to be the next Netflix, or you can buy Netflix. We've seen Disney, Warner Brothers, Paramount, Peacock. They'll try to mimic that model and struggle to get the traction. I say buy the original. If we do hit a recession, a lot of people are going to cancel a lot of things, but they're not likely to cut their Netflix account. They added 8 million subs in the last quarter. They have 250 million subscribers out there, and yet this is a relatively inexpensive name for such a high grower.
Okay. Any other players that would come to mind right now?
Yeah, a name we've been in for the last couple of years is Meta. We actually added fairly significantly to that position, during this last week. Everybody's concerned about the CapEx spend and what it means to profitability. They're one of the few players that can actually capitalize on that right now, and they are. They're better able to target consumers and capture more of the ad dollars. So I look at this company. This is a mid-teens grow on the top line, 20% on the bottom line. Pretty important stock to own.
Okay. David, always good to get your perspective. Thanks for joining us as always. Nice to see you.